Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Despite the US dollar index, which measures the greenback strength against a basket of 6 major currencies, retreated from 104.50 to 104.38, the Australian dollar sentiment has deepened further into bearish territory, placing the 3-day relative strength index, or the RSI, into extreme oversold condition. From the 9-day decline, which is one of the longest we've seen for a while now, we're getting very close to the support level of 65.30.40, which could anticipate a rebound or bullish response and therefore look back towards the region of 66.5 to 67 cents. I'm not negative down here due to the fact the market is extremely oversold and the ADX is getting somewhat overheated. So therefore, from this assessment, I feel the market can or may correct. With the local economic calendar recently light, things are likely to get a little bit to the lively side as the attention shifts to Thursday's release of the second quarter US GDP and Friday's personal consumption expenditures, or the PCE price index, which is seen as the US Federal Reserve's preferred inflation gauge, which will provide key insights into inflation trends. Shifting onto the euro, the market was also a little bit weaker, despite the fact that the US dollar did ease slightly. Nevertheless, the support level is seen at 108.35, and if we do see a bounce off there, should see a rise back to 108.70 and on to 109.10.35. I'm not going to get too negative here due to the fact that the indicators aren't fully supportive to provide a bearish case, and therefore could see the bounce. The Japanese yen continues its strong performance as it deepens its descent, having breached the level of 154.70.90, now looks towards the next level, which is at 152.55.70. A break there would expose further risk to the downside and look towards the key level, which is seen at 150.50.75. With any bounce likely to find resistance somewhere around 153.30 and slightly firmer at 153.80. Posting a long-legged doji, which is indecisiveness, the market is still finding good support, that is, for sterling at 128.65.85. I feel that in light of the current pattern, bounce may be due soon and look back towards the top side of its range somewhere around 130, and with the weekly still holding potentially at 131.50. Stops are triggered on gold as it takes out the level of 2,394, and from there exposes the region where this broad uptrend comes in around 2,342 to 46. However, the market is likely to be looking for bargains as the descent continues. No doubt we may see some initial demand returning, and that is from around 2,366 to 2,358. And as I mentioned, the trend line seen around 2,342 to 46. If we do get a bounce or a break, that is towards that top side level around 2,400, could reignite the upside on towards 2,450 as the technicals now are getting close to oversold territory. Wrapping up with oil, the market still wavers as it continues to look for direction, but nevertheless, since the recent break around this 77 mark, the bearish sentiment has strengthened with the ADX trending, could see a further slide, that is towards the region of 76.60 to 75.70, and with a base hold around 73.60.80. To reverse this pattern, the market has to break through the level of 77.80.90 to reignite the move back towards $79 to $80 a barrel. Well, that's a wrap. Thank you for joining me, and as always, grab the intraday report, and I hope you enjoy the great start to the day.